Hey everyone, welcome back to Upside Down Data. Today I want to talk a bit about MultiversX and why I think it might be an interesting project to watch if this crypto rally continues. So to start off, I want to say make sure you go ahead and check out our website that we just launched recently, polaritydigital.io. That's what I'm showing you right here. This is our dashboard page where we have a bunch of different assets that we have models for, and then live output of those models here on the dashboard. So we have output from our upside downside potential indicator, our risk model that we have here on the channel. The short term cares about days to weeks, medium term weeks to months, long term multiple months time frame that these different versions care about. We have our momentum bias indicator, it's our momentum model. We have our trend confidence indicator, which tells us how confident can we be in our given uptrend or downtrend we're currently in. And then the MDC, our market direction classifier, another trend indicator. And we'll talk about different ones of these here in this video. But where I wanted to start us off was talking about the UDPI, different risk levels, or more specifically, the relative upside versus downside potential that given assets have. And the way you can read this is that when you're really deep into the negative, so -5 being the lowest, that means there's a lot of upside relative to downside potential that's plausible in that time frame. And then if you're up in the positive side, that means there's a lot more downside than upside that's plausible. And so what I've done is I've actually sorted this dashboard of all these different assets that we have models for. I've sorted it based on the long-term UDPI, so kind of the more macro-focused upside downside potential indicator. And what you'll notice is that MultiversX is the lowest. It has the most upside relative to downside potential in that more longer-term time horizon than any other asset, or at least its long-term UDPI is sitting at the lowest compared to any other crypto asset. Same story with the medium-term UDPI, so kind of weeks to months in time frame. Again, the lowest relative to any of these other assets. And if we look at the short-term UDPI, only XRP has a lower rating right now. MultiversX at -0.96, about -1, and that is lower than a lot of these other ones. And we can see, if we flip it the other way, it's sitting well below something like Phantom or Polkadot or Hedera Hashgraph HBAR. So what does this mean? Well, what's interesting about this and why I was saying in the beginning, if this crypto rally continues, why might this be interesting, is what it might suggest is that even though some other assets have really kind of run recently, kind of gone nuts, realized a lot of their realistic upside potential. So for example, Phantom had gone kind of nuts in the past, weeks before this, the past couple of weeks, and it's chewed up, it's eaten up a lot of what the model thinks is its realistic short-term upside potential. But then if we look at MultiversX, it hasn't really done that so much. Price has gone up, but it's not gone up to such an extent that the model thinks that maybe it's exhausting its realistic short-term upside potential. And then that's confirmed, when you look at the medium term and the long term, it also thinks that there's quite a bit of room left for it there. And that, is greater to some degree than these other assets as well. If you look at the medium term, there's a few other that down in the -2, but not many. Most are down at the -1s. Or the negative point whatever, or actually above 0. And then a similar story with the long-term UDPI as well. So let's just go and look at these a little bit more. So I'm going to actually flip over here to our workbench tool that we have here on the website. So this gives us a full graph, and I've just overlaid the long-term UDPI for EGLD over the price. Price has moved up, right? Up from about 32 on the lows up to about 44, so not bad, but not as parabolic as we've seen some other assets doing. And so what this means, and what the model is suggesting, is that EGLD hasn't realized the upside potential that it could have. And so what that might mean is if we get another big impulse in the market, maybe EGLD is primed to do a little bit of catch up. So other assets have really pumped, maybe people will take profits off of those, move them into an asset that hasn't moved as much, like EGLD. There's no guarantee, right? There's no guarantee that that would happen. People might dump their money elsewhere. But what it does mean is that if you're thinking about an asset that could have room to move quite a bit, EGLD looks like it may be a better option right now than some of those ones that have run a lot. Now, of course, that's not financial advice. There's no guarantee that EGLD is going to go parabolic in the coming weeks, and a lot of this is dependent on if the broader market would rally. But it's the potential is there, and we've talked about this before on the channel, this idea of rotation, where oftentimes what happens in these crypto rallies is people take profits off the ones that move a lot, and then move it into ones that haven't moved as much, which then causes them to run. And then you get these phases of the market where some early runners happen, then you have some kind of middle of the move runners, and then some later of the rally runners who go last. And if you can really kind of play those waves, you can actually compound your profits a lot more than if you just sat in one asset the entire time. So that's something I think is useful to just keep in mind. And so again, with the long-term UDPI, we're sitting quite low, coming off of this deep low down here, negative 4.45. We have moved up some degree, but not excessively. And then if we look at the short-term UDPI, we have moved up and we've actually broken above this kind of point that's active resistance back here, which means we might have more upside that we could realize. And what I'd maybe be looking for on the short-term UDPI after this is somewhere more around the 1 level, roughly where these two kind of peaked out, the last two kind of relief rallies during the bear market. I'd watch that level as maybe being another target on the short-term UDPI. And if we can clear above that, then it's possible we can go target some of these higher levels that we've seen some of the other assets targeting, these levels above 2 potentially. So that's a risk perspective of why EGLD is interesting. So another model that I wanted to talk about quickly as well was the market direction classifier, or MDC. And this is our trend indicator. And so basically what this model does, if you're not familiar, is it creates this critical level. That's this purple line on this graph. And basically if the price flips above that level, that's bullish. And then you can see these big explosive moves to the upside. And if you flip below the critical level, then you can get these really nasty moves back down to the downside. And we've seen that multiple times. And so what you'll notice is that just recently, EGLD actually has been able to flip the critical level. The critical level right now is at about $43. EGLD is sitting above that. And so if it can stay above that, and then especially if you can get some of an impulse, that might confirm a bullish movement, which then could start eating into that realistic upside that the short-term UDPI is saying it thinks, EGLD has in kind of the shorter term. And especially it being an outlier where it hasn't really moved as much as the rest of the market, maybe this is where EGLD could start to play catch up, really start to kind of eat up a lot of its short-term upside potential as well, kind of catch up with the rest of the market. A lot to see, but certainly if you look at what can happen when you flip bullish on the MDC, that is pretty impressive price movement. Now, if you want to know how I created this nice color coding of red versus green, I used this formula, and this is a really powerful feature of the workbench that we have at Polarity Digital. It's a feature we really wanted to include in the website because we thought people would find it to be very useful. So basically what I did is I created a formula. You can do this by just saying adding formula. So I have, the MDC critical level as one of my metrics. That's metric M2. Metric M1 is just the price of EGLD, and I have that set to red. And then the purple, the critical level, and then I've set the formula to be green. And basically what this formula does, it just says that if the price is greater than M2, so if price is greater than the critical level, so if price is above the critical level, then be M2, so basically just show the price. And if that's not true, just show 0, just show nothing. And what will end up happening is when you do that and you set it to be in the log scale and then to be on the same y-axis as M1, so that would be Y1, what you'll end up getting is this really nice chart where you have green when the price is above the purple line, red when it's below the purple line. So if you want to make that for yourself, that's how you can go ahead and make that. So we've just flipped bullish. That's great news. We're still close to the critical level, so we can see confirmation. But if we can stay above it, and then especially if you see an impulse in the crypto market to take us higher, I think EGLD could put in a decent move from here. Not financial advice, make your own opinion, obviously, but the possibility is there. The conditions are there. We just need to see them actually be realized. Now, the final thing I wanted to talk about here as well was looking at the momentum bias indicator for EGLD. So the momentum bias indicator is basically the prevailing momentum that's in the market is prevailing to the upside or prevailing to the downside. And so when you're up in the green zone, that tends to be in these kind of big impulsive moves to the upside. Red tends to happen in these bear markets. So you're spending a lot of time in the red like we did back all the way through here. That's bear market behavior. And you get these kind of brief attempts to reestablish positive momentum that then get rejected to the downside, and then you go deeper and deeper and deeper. Now, what's notable is we're trying again now for kind of the third time to establish positive momentum bias. And, if EGLD ends up doing what we think is possible, going on a bit of a run here, then I think we might actually be able to clear up to some of these higher levels that might mark a transition period for EGLD, where here we've been very much in a bear market stance this entire time, although notably kind of the bottom of negative momentum really happened back here in June, but still we've not really been able to reestablish positive momentum. If we can go and spend time up here in this higher level, and then especially kind of start oscillating around 0, then sort of something like we did over here, that can be what sets the stage for the next bull run. We talked about this with the MBI for other assets a lot. A behavior you see with it is this kind of oscillation around zero that happens in accumulation ranges before ultimately being able to go into the next run up. And so what we might look for is EGLD to do something like it did back through here, kind of this kind of behavior, and then hopefully we avoid something like the March crash, although March 2020 crash, although who knows, anything can happen. But something like this, which maybe we're actually setting the stage for now, which then could transition into something more impulsive, move to the upside. Now, obviously, that's dependent on the rest of the crypto market going into a more bullish stance, and also I think, frankly, equities, risk assets in general, stock market being more bullish. But if that could happen, that could set the stage for the next kind of big bull run. And what's also notable is that when that happens, the MBI tends to catch these moves fairly quickly, especially to the upside. You can see it flipped into the green all the way back here, then off to the races we went. Back here, flipped green all the way back down here, off to the races we went. Flipped green all the way back here, off to the races we went. And so if this could be the start of a transition, then maybe we can catch one of those as well. And then I'd be more confident of that as we could see us clear in these higher levels. And the nice thing with the MBI is that if you are going into one of those big rallies, you can kind of wait for some confirmation and still have a lot of upside that's left. It's not that you have to catch that cross immediately, because again, in a bear market, those crosses don't always play out. So again, not financial advice. You should make of these data as you will. But I think this is something to watch of how does this develop? Do we start seeing some kind of oscillation around zero, suggesting that this kind of is a transition, this is a transition out of the bear market, maybe into an accumulation zone, which could then transition into a bull market later on. So overall, what I'm looking at with EGLD is I think it's kind of an anomaly from the rest of the market. It's kind of lagging behind. It has not done the crazy things that we've seen some of the other assets do in the last month. And we can actually just look at this. If I just change the metrics that I have on here, I'm going to change the 24-hour to 30-day, and you'll notice that some of these assets have been going absolutely crazy in the last 30 days. Solana up 150%. A lot of these up 70, 50%, etc. EGLD is sitting a bit below in that dimension. Not the lowest, but it's only the 5th best in what it's done in the last 30 days. And so that's where I think it's possible, if the market conditions are right, if we can maintain a bullish footing in the market, that EGLD could maybe start playing some catch up and then maybe actually start putting in higher percentage moves, really kind of bolster the strength of this rally that it's been in so far. Time will tell. Obviously, nothing is guaranteed. You should make these data as you will. Something I wanted to point out here. So if you want to look at these data for yourself, available at polaritydigital.io. Again, the link is in the description. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And then also, of course, go and check out polaritydigital.io.